Hi, everybody. Great to have you here for After the Close. My name is Mike Fairbourn, coach sitting in for today, but it is nice to be here with all of you. Folks, today I want to take a look at maybe preparing some of the fundamentals we talk about in this class tied to the technicals in terms of what we might get tomorrow, next week, the week after. Really wanted to combine today talking about really good, solid earnings beats, companies that beat their earnings expectations. So they surprised on the upside there, but then also on the technical aspect, they either gapped higher or are breaking out. So earnings with breakouts as well. And that's positive earnings with breakouts. So I look forward to going through that with you all today. Just taking a look at the chat here. We got Ben Watson. Ben Watson in the chat, and we've got, it looks like the Ben Watson fan club in the chat as well. Great to see. Hello to you, AJ. We've got Will, Scott, Robert Boucher. We've got I love the fast lane, life of the fast lane. So with that, let's get started here. I'm excited to talk about this, our topics today. Hope you are as well. Hope you find it interesting. Folks, let's dive into our disclosures. Starting off first here, information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular strategy, security, chart pattern, or investment strategy. Couple points up top here. Paper money software application is provided for education purposes only. Investing involves risk, including the loss of principal. Backtesting is the evaluation of a particular trading strategy using historical data. Results presented are hypothetical. They do not actually occur. They did not actually occur, and there is no guarantee that the same strategy implemented today would produce similar results going forward. Final points. Past performance of any security strategy does not guarantee future success or results. And last but not least, there are risks associated with investing in dividend-paying stocks, including, but not limited to the risk, that stocks may reduce or stop paying dividends altogether. So with that, again, welcome to you all for this class after the close. Good to be with you. Mike Fairbourn sitting in. Hello to you, Alexis, as well as Jay Richardson. Great to have you both on board here. Within this class, I wanted to just show you this slide so you get a general sense of it here, but a couple of things to keep in mind. Two analytical approaches to trading and investing. Now, today, I really wanted to do this. I wanted to just kind of put a plus sign and add both of these together. I want to look at technical analysis. In other words, today, I want to look at maybe some of those companies that have recently, with fundamentals, strong fundamentals, broken above a range, so earnings with breakouts, or simply just earnings, positive earnings. Let's just put an E down here. We're looking at companies that had earnings, and this is, by the way, if you didn't recognize it, it's not a great drawing, but this is a chart here of a stock that had earnings. Let's just say, for example, hypothetically, you're going to get a list of them real quick here. In fact, for you guys, I did send out I sent a tweet out just at Mike Fairbourn CS, and I think Ben has put that into the chat already, but our handles, but I did put a list of companies within the NASDAQ 100 that did have earnings beats. You're going to see some of these. In fact, we're going to be looking at some of these as well, but I just bring that up because some of you might be seeing this on the recorded version as well. Okay, here's that earnings announcement. You get a strong earnings number. That's an earnings beat. So earnings were positive. They beat expectations. There was a surprise earnings is what occurred there. And you got this gap right there. Prices ran up. These can be very, very interesting because a lot of times trends that are going down over a period of time, coming down here, all of a sudden you get an earnings announcement, surprises everybody, and the company has found a way to get past. Sometimes they will go up. They've got past all, their problems or whatever it was that was occurring. They've turned a new corner and they start to go up higher. So today it's really combining in earnings beats with breakouts, or earnings beats and gaps. So sometimes you'll gap and then you'll start to break out too. Don't want to exclude those guys either. Those are interesting kind of setups as well. One more slide, but real quick note here. We talked about technical analysis, fundamental analysis, analyzing companies' financial statements like balance sheets and income statements, looking for value or potential growth. Now, with that in mind, I want to say that it's really, when we're talking about earnings, we're talking about the income statements. What's made on the income statements is ultimately put into other financial statements like the balance sheets. But when we're talking about what really tends to move a company, it's, around earnings. Well, it's a report of what comes off the income statement that reports on it. First of all, we've got revenue up top, also known as sales. You got revenue. You subtract expenses from that, and there's a whole host of expenses. Revenue is just normally one line item, and you got like maybe 10 or 15 expenses, and then of course you've got earnings. But it's not just earnings. It is, in fact, because we're dealing with public markets, it is earnings per share, EPS. Okay, so we're going to be combining that today with earnings breakouts. Just one more slide to highlight here for you. There are a few different categories that some investors, traders will look at. Specifically, you might find more traders in this growth investing style. You might imagine growth, they are looking for more stock appreciation than, let's say, for example, dividends or intrinsic value. Whereas value investing, well, the name's there. You're looking for value. You can look at growth. These can be combined. You may have heard of, there are funds out there and ETFs too that do look at growth and value investing, growth and income. I've even seen value and income, whatever way you want to mix and match it up, they're out there. Today, we're kind of looking at growth. I've kind of got that highlighted because we're looking at earnings, companies that came in and they beat earnings expectations. However, that does not exclude the fact that it could be a value investment, or they could pay dividends as well. So a couple of notes on there. Okay, well, that's enough talking. Let's go ahead and take a look at the general markets, because this is looking for, we're looking at after the close, and we're looking at maybe some recent news events that have occurred that we might be able to take into after the close, as in tomorrow, next week, the week after. I have created, and this is what you're going to see on that X handle. Let's see. Yeah, I don't know if that got put in. Let me just do this real quick. Because I'm not going to go to it, but I'm going to post it in the chat for you guys, Mike Fairbourn CS, because I did list this. And by the way, just so you know, I'm going to put a list of the top 10 companies that within the S&P 500. This is the NASDAQ 100. We're going to look at the S&P 500 that beat their earnings expectations, and that also, if you can believe it, had a really strong 1 week run. Palantir up 40% off their earnings beat. Today we're going to be looking at earnings, though. A couple of things I want you to keep in mind. So we're looking at earnings beats. So yeah, I get talking these longer words, and then I start writing it, and it's kind of like I have to spell it all out. But it's an earnings beat. Try to write this a little bit better going over here. Earnings beat. So in other words, they beat expectations. Okay, and we're taking the earnings beat, and then we're looking over here and saying, well, over the past 10 days, there was the company beat earnings, and now we want to look and see what the price performance was, because sometimes, as I'd mentioned, and this might make more sense now we're looking at charts, you could start to move and get going off the bottoms and stuff like that, right? And I've seen this, I witnessed it firsthand for over 2 decades, actually. When earnings can kick in gear, so too can price action. It can kind of open up the price action, and we can kind of get moving. So let's throw that out there as an idea, as a concept, because a lot of times, well, the value of the company, when a company beats earnings, ultimately, Warren Buffett talks about retained earnings. As a side note, a lot of investors will, when a company makes earnings, sometimes they retain a lot of those earnings, and that can lift the total value of the company up. Sometimes if they really beat expectations, and that's what's going to be interesting here. It was an earnings beat. The street was expecting a different number. These guys came in and beat that number, and we're going to look at those results in anticipation of a possible follow through to the upside. I'm going to start off with one. I think it was number 10 on my list. Is it still 10 on my list? Okay, I don't even see it. We've had some pretty good gains. Well, maybe that was the S&P 500. But here are the weekly gainers, and they should be, yeah. And I had some that beat expectations that lost because they guided lower. So that's what I put a list of these in here for us in the NASDAQ 100. This is not the whole entire NASDAQ 100. These are just simply companies that had earnings over the past 10 market days, or 2 weeks roughly from today back. All right, I want to start off with this one actually first. just to give you a general idea of just some of the chart patterns that I just kind of explained. That is IDXX. Okay, now what's been going on with IDXX? Let's go full screen here for just a second as we look at this. But IDXX, well, and I looked at this in my swing trade class on Tuesday. We had a bit of a shoulder head shoulder here, just an example, but there is an earnings beat. We're going to be looking at a bunch of these, like I said, today. And notice what it did. Really, for the first time with earnings, we've been able to clear a recent level of what was resistance and now could be support. And a lot of times when you get that much resistance build up, what you actually need is a fairly good amount of buyers to get through it. We had some good volume there. I realize we've been going flat a little bit here. One way that traders might look at a trade like this and say if it could be a reversal. Let me just show you the weekly so you get a sense of, well, let's just go a 2-year chart. We'll get the extent of maybe what earnings has been doing here. There's your 2-year. I mean, it's been, okay, so last year, this is actually, February of last year, so about a year out in time where we are. Look at this, lower lows, clearly. Long stretch of lower lows and lower highs. Nothing turned it. Nothing turned it. Now we got, in fact, we got this gap down, and here we have the gap up. Now, so I've seen this happen, just not a guarantee, but notice even down here with earnings, was that the turning point of the move? Absolutely it was. It was a turning point. Prices went higher. It looks like based upon the market's reaction, they might have beat earnings as well. Let's look at those earnings beats right now so I can highlight this for you. Let's zoom in as we're combining here technicals with fundamentals, get more insights potentially. I'm going to just point to the earnings right there and then you'll see it. Earnings estimates were $2.39. They came in at $2.62. So yeah, about what, 23 cents beat or something? Something along those lines, not bad, but a lot of times it's the guidance as well. So what these companies can do, after they beat earnings, is maybe the share prices hold that prior level of resistance, form a base, and then begin to trend higher, okay? Also with this, there is, notice over here, we have a missing portion of the chart, left-hand side. Right-hand side, we've got a missing portion of the chart. Anybody know the name of that pattern? There's a couple names for it, but I'd love to see it in the chat if you know. By the way, hello to you, Carlos, James, Ben West, Kenneth. Great to have you on board. Scott, Kevin, Curtis. Welcome you guys. Mike Morrow, TM. Good to have you all. Mike Fairbourn sitting in for our after hours class here. We're combining earnings beats and breakouts. Or breaking, this is kind of a breakout above resistance. It's not like a new high range, but that's kind of our topic today. Fundamentals and technicals. Okay. Any idea what that is? There's 2 names for it, actually. Yes, you got it. Jay Richardson. So does Kevin, right there. So I've seen an island reversal, an island bottom. Basically, you got it. You got the keyword. It's an island. It's an island. And a lot of times when you get this is what prices will do. They'll just go like this. They'll notice this down here. If you get a breakdown and a breakout, especially around an earnings cycle, earnings here, right? We had another earnings. I'm drawing it above, but you can see the earnings. Well, I'll just use some different colors here. Hang on a second. Colors right there. Colors and colors, you can see. We jumped up above there and we left an island. And a lot of times these have been known as an island reversal, an island bottom. Because, and I've seen it happen many, many times with earnings right there too. Can kind of get us going, get us stationary, and get us moving a little bit. So keep that in mind. We got that there. It all came with the earnings beats and a follow through. So I just tracked the price performance off in earnings beats. Now there are going to be earnings beats that you can track too. Just as a side note, up here, Market Watch tab over, hang on a second. Oh yeah, calendar right here. And I've just got earnings checked. Again, you can come over here and just look at, let's say, the S&P 500. I was looking at NASDAQ stocks initially. I'm happy to pull up the 500 during our class. We got time to do that. But if we come over here and take a look at this, what does it show us? This is S&P 500. I've got it set up on a monthly chart over here. Cool stuff for looking at stocks after the close into tomorrow, because we do have companies, 40 of them right there. I like the monthly view. Some people like the weekly. I do like the monthly. I like to see what's happened in the past and what could happen in the future. You know, who's being reported here in the 500 S&P 500. But look over here, two key columns: earnings estimates and earnings actual. EST and ACT. That company came in. Was it APD? Came in right at hit their number. The one right below it beat estimates. Hilton, HLT. Is that Hilton? I think it is Hilton. Maybe not. Uh, but it beat expectations right there. Do you see it? We got another company that beat expectations. We got a company right there, XEL. Honeywell beat, XL missed expectations. Estimates were for 86 cents. They came in at 81. So there's some great stuff we can look at and track into tomorrow as well, after the close. Okay, just wanted to highlight this. You can go back. We are technically going back 10 days and looking for performances, because a lot of times you might get, like what I just had shown you on the chart, you might get something like this. Why would 10 days? Why would 10 days, 10 days, or you could say 2 weeks in the market, you know, two total weeks. You know, how could that be effective if they beat expectations 2 weeks ago? Well, a lot of times on those earnings gaps, if we had an earnings event, it'll go like this. It'll gap up here and come down and test and kind of consolidate. And then sometimes they will go higher. Believe me, guys, that is easily 2 weeks sometimes. But my whole thing is it's up to 2 weeks. So it's literally 1 day to 2 weeks. Okay. 1 day to 2 weeks. 1 day to 2 weeks. Or 10 days. 1 day to 10 days. Whatever the case is it's through 10 days. Basically is what we're looking at here. Okay, so there's a lot of action that could happen behind the scenes, but that's one to look at here. Now, a quick note on this: when you do get a big earnings day like this, what some traders will do is you can draw a line right across that top and right across that bottom and say to yourself, there was a lot of volume on that day. There could be some resistance up here. I'm going to wait and not touch anything until I have confirmation that prices have either broken up here, or conversely, they could bounce off the bottom, and you might say, well, that's just the pullback to support or something, or even down through here, and then a breakout again. There are a couple of ways to look at it. The other thing is if you just get a sharp move down here and you just happen to break lower, you might just say, bag the whole trade. It's breaking below that day. I don't know what's going on. Weakness in the market, whatever the case might be. Yeah, how bad was last earnings, says James? Good point. You can come over here and just take a look at it. They beat earnings expectations. There was a guidance, there was some concern that maybe didn't materialize in the market. They beat estimates. And did they beat them over here again? They might have, because it looks like we gapped up. No. They missed expectations, beat expectations here, beat them again, and boom, we're starting to roll a little bit. Okay. Let's keep rolling here. Let me see if I can answer any questions, though, here. All right. No, let's see. I think we got all the. All right. Oh, let's see. That was the one question. Another one for Beauty is how can you run a scan for companies that missed beat earnings? Now, Beauty, that's something that I did address. Although we don't have time in this class, and I do teach a class tomorrow called ThinkScript. If you're interested in checking that out, you could do that. We talk a lot about building scripts, and we build up several of them. We were going to be looking at maybe some of the volatility squeezes, but that's something I think I've actually talked about one in the past, an earnings gap and go. Let me just put this in here just so you guys have it. You're aware of it. I think many of you already do, but it's just the playlist. If you go to our channel here, this is where you'd find it. Since we did get a question on, I'll highlight it right here. I'm going to go ahead and just go to playlists, and it's ThinkScript. Where are you? Control F is what I'd like to do on this, and it moves around all over the place. There it is right here. So here's the full playlist. I'll go ahead and plug that into the chat for you. Last week we talked about a double divergence, finding those in a scan as well. But I'm glad you picked up on that, Beauty, because it is something that we can do within the Thinkorswim platform that is so nice to be able to have. Oh, cool. There you go. And there's your, anybody wants that playlist, it's right there if you want to check out some of those as well. But I got that right. Oh, Amazon After Hours. What's going on with Amazon After Hours? we're in the middle of going before we go into our next topic, so let's take a look at it right now. Amazon After Hours, this is one way to check it out right there. 238 to 234, down about $4. Oh, it had earnings. Okay. It had earnings. It beat expectations. It sure did. By about 37 cents or so. Huh. Okay. Sometimes it's interesting to see how the what happens too during the conference call, which is right there. Do you guys know about the conference call? If you double click on that right there, it will pull up the website of the company. It pulled it up on my other screen. So you can, get on those conference calls as well, just as a side note, just as a heads up there. You can click on it. I clicked on earnings. It does the same thing. Okay, cool. It just pulls up the link to the company's place. Anyhow, interesting right there. You can take a look at that. Did you know over here too that, quick note, this is fairly new. There is this, if I go over here, no, let's just do it while we're at it. No, yeah, right there. NASDAQ 100. See this extended hours change over here? It's a new column right there. If we go in, I'm going to put these in alphabetical order. Where is Amazon? Oh, down here. And not in alphabetical order, but not the names, the description. There you go. But you can see right there, it is down 1.3% in after hours. EXT percent CHNG is a new column that can be selected, fairly new. Within the last, I want to say 3 months, it's been added in there. Something you guys might find of interest. All right. Now, oh, sorry about that. Let's see. I think we're good there and there. Okay, let's get back to our core discussion here. All right, let's see what else we have over here. So I talked about some of the others, like PLTR. So there's an earning gap, and actually much of the price movement came within the gap itself. There's a 6-month chart you can see right there. I mean, this, it really hasn't done a ton after that gap, but it was a huge gap up in price. Earnings right there. We beat earnings. 5 cents came in at 14 cents. Okay. Team gapped above their highs. So an earnings earnings beat with a breakout. Wanted to give you guys a list of some of the biggest movers out there today for that to check out after the close into tomorrow and into next week. Again, we talked about these breakouts and how there can be this tendency after you get these gaps. What did it gap above? Well, it gapped above. We have to say gapped above something, gapped above resistance, and then this might end up being support. I give you guys other additional tool, or just I could say process that some traders will use, and that is that if you break above, like I said again, like we looked at that IDXX chart, did we get above that high yet? No, we did not. Some traders like to say, hey, if I can break above here, we might actually get going, or bounce off that bottom in a bounce range, but don't trade it if it goes below. So there are a couple of different things that could be considered here, a couple of different steps that could be looked at. Let's look at T-Mobile. Okay, I want to talk about gaps today as well, because this could be on the verge of a breakout. We're very, very close to it. There is your gap right there. We got a little bit of a trend line break over here, came over here. Earnings was really quite strong, and we sunk right back down to that level. Notice a lot of times this is really, really common to do. What happens is you break up higher here, and then you pull back. And then you fire back up higher again. You might get like a K-hole, a close above the high of the low day, or something along those lines that could get things moving there. So just a consideration as you look at that. All right. So I'm going to pull up. We're going to pull up a different group here in just a second. Here's Starbucks. See the gap? It's funny, these gaps really, I should say the earnings beat. We can come down and look at every one of these if we need to. It was an earnings beat. The market certainly liked it, and it rallied, and there's your gap right there. Right there. Now, is this trend, could it continue on up now? Let's look at a weekly chart real quick of it. Okay. I mean, there's higher levels that Starbucks has met previously. We've got this We've got, just above 125, and here we are at 111, I guess, today. But that's a fairly big run. Sometimes after these runs, too, you can get a consolidation and another possible bull flag pattern for prices to come up again. The nice thing is that you did get an earnings beat, and that can be a sign. It can be an indication of fundamentals going forward. I mean, if fundamentals are looking stronger and they're looking pretty good, that can attract a lot of growth investors, like we talked about earlier, right? So there is that aspect there that could help to provide some structure to the underlying trend. What I mean by structure is just simply it could help keep the trend up. You could get more interested buyers because the value of the company itself might also be, rising higher too, along with it. Okay. All right. Now, let's continue on. Any question? Okay, I'm gonna hit some questions here as we go into this right now. All right, let's see what we got here. Oh, let's see. Yeah, it would be great if you could discuss how to handle a winning, losing position after earnings, assuming a big move. Okay, so yeah, good question on that too, Lexi. So that's really, I talk about those core concepts in my Tuesday swing trade class. I want to show you guys some ideas here, but let me take some time, take a look at that real quick, just to kind of highlight it. A lot of times on these moves, in fact, we go into a lot of different concepts, really pretty heavily in that swing trade class. And I've got, by the way, I should say this, because if you did want to take a look at one of those, I do have quite a few that I've already done on the swing trade that you can see the methodology behind it, which is, I think, what you're getting at here. But I'm going to show you something as well today, but just as a highlight, if I could find out where it says swing here, I'll click on it. Right there, up top. Okay. See, just a little thing in orange, kind of hard to see. This is a fairly new class, but say, for example, we went into trading with divergences. Much of this is about flag patterns. These were two specific patterns with specific rules behind them, Alexis, that could be helpful to you. I'll go ahead and throw that into the chat as well, if you'd like that. But I'll just, swing trading. These are shorter term trades, but they can be used on you can use the same concept too on, let's say, for example, a weekly chart, which is a longer term time frame. Okay, let's hit that though. There you go. There's that playlist. All right. So over here on Starbucks, let's say we're looking at Starbucks, for example, where might the target of this be? Where might it go? Well, there's a couple things that technicals will tell us. You have to know a few of those rules, of certain things you're looking at. There are three types of gap trades, and that's tied into our discussion today. So I'm happy to address that for sure. Three gaps, okay? There's the exhaustion gap, there's the continuation gap, and there's the measurement gap. I'm just referencing like old school technical analysis books. Let me clear these off, and I'm going to highlight it on this class specifically. Oh, dang. There we go. All right. So this could be perhaps a measurement gap due to the fact that we had an earnings break and it broke an earnings beat that broke above resistance. Now, if you come over here and take a look at this, do you see the range right here at the bottom? Up to the top of that move right there. That's a price range. Now, since I'm using the term measurement gap, it might make sense just in the terminology what it does. It measures this price to the next gap up level. So there's the next gap up. What is this price? We've got to make those prices equal to this price, right? And that's approximately, I don't know how, I'm just going to eyeball, but I'm going to say maybe somewhere up here. You see it? This price range from the bottom of the measurement, you take this range. As soon as you gap up, it's all about the gap right there. It's a measurement gap. You take that same distance, and that could be your potential target. It's not to say that you wouldn't get little flag patterns coming up, back and forth. Let me take a look at a few more of these, and let me see if I can address some other possible ways to trade these. There is our meta, the meta trade right there. We gapped higher, and you can see, still a continuation of the trend. So this trend that's been a strong trend since really the end of 2022. Really kind of moderate pullbacks as well. A lot of these companies doing really quite well with AI. There's your Costco. Costco clearing 1,000. So another strong move up in Costco. Um, one thing I would say on Costco, let's look at this as a flag pattern. This is one what we talked about in our class. In fact, we did put a swing trade on this on our Tuesday class, and we were looking at the possibility of flag pattern from here to here. So this is the standard flag pattern and how to trade it, how some traders will trade it. There are a couple of different points I'll note, but here is the measurement to the upside, and a flag pattern just looks like a flag. It's one of the stronger patterns out there. A lot of technicians will tell us that because of the fact that, well, you get a big, strong move and you get a very, very mild pullback. And if the trend is up, both of these things can be quite positive. That's a lot of times how strong trends move. They just flag pattern up consistently, 4 or 5 different flag patterns, perhaps, you'll see. But if this is the initial pull of the flag right here, here's your pullback. And we see the prices coming up here. There are 2 targets on a flagpole. Let me highlight those right now. The first target is the prior high. So if it does start to rally up, that was right at 1,000. The next move is this range right here. Let's clear it all off and I'll show it to you. So you take this price move and then you take that and you add it to the bottom, the perceived bottom, and you look at basically that same price move. And then that right there represents, okay, I'll put it in blue here. That's your target 1, back to the high. That's where some traders will get out, target 1. Target 2 would be the full length of this move. Now, since we're on it, I'm going to highlight it just so you guys can see it. Let's just do that right now. Let's click over here. Let's click again. And I'm going to come down here. I'm going to use this cool little tool, is Fibonacci extensions, that I've clicked on right here at the bottom. Sorry. Right there at the bottom. Click on that just to the right of the percentage. And what you do here is you click down here. Let me show you. You're going to click here off the bottom and you pull it to the top of that range. That gives you a full 100% range. You pull it down to the bottom and there's your 100%. Has Costco hit its 100%? Actually, it did yesterday. So it's already met the bull flag target for that move. Okay, that just gives you some ideas there, Alexis. Absolutely. Yeah, I love the question. How do you measure the pull? You measure it in price. So it's a price. You measure it from the bottom of the run. You can see it's the low of this move to the high of the move. And then you're looking at the pullback here. This is the longer term flag pattern. You can certainly do shorter term ones, which we do in our swing trade class too frequently. Here's another one. Look at this move right here. Do you see this run up right there? We can do the exact same strategy here. Low to high, low to high, probably somewhere over there. It looked like it came right in the target range and it dipped down. That's target 2. Target 1 would have been right there. Or some people do like to take their swing trades off of the smaller bull flag patterns. Okay, good. This ties into our class. It's a good concept. Let's look at a few others in here. We got those ones. There were, let's see. There's another gap. ROP, yeah, gapped up. It could be a measurement gap as well. You could measure this up higher. We've kind of slowed it right around here, around resistance. I'm going to drop this down to about 1 right there. 1 year. You can see where we're at. One little click over here. I'll show you the weekly. Ooh, that was some resistance. So we might have just broken above longer term resistance, and potentially this could be going. What is ROP? Let me go to my Analyze tab and then Fundamentals. Roper Technologies is what it is. And it develops software technology. Let's see. Software technology enables products and solutions, application software, etc. Okay. I still don't know what they do, but hey, I'll tell you what, they do technology solutions. Anyways, you might want to look deeper into that, but there is your earnings announcement. Boom, there's your earnings gap right there. About 9 cents right there. But like I said, a lot of these earnings gaps are probably, they reported good numbers, but then also they said, yeah, there's more to come too, or they might have raised their expectations as well. That's a lot of times what can keep these companies moving. If I wanted to flip this over to the NASDAQ 100, we could do that as well. Excuse me, the 500. There's my IDXX right there. It was down a little bit today, but there you go. Another one that's been up is Amgen. There's the earnings announcement. There wasn't really a gap. There was just a big day that followed through. But this could be a reversal pattern as well in terms of something like that. What else do we have? CTSH. Yeah, pretty big move today here. They beat earnings. We know that. Yeah, about a 9 cent. I'm sorry. Uh, yeah, 9 cent beat roughly as you broke out here as well. Folks, these are things that do go hand in hand in the market, and I wanted to get that point across to you today. Definitely look at, well, if you're looking at, well, let's put it this way. You can definitely look at earnings and earnings performance as it's related to the stock chart too. So I hope I gave you some ideas of how to do that today, looking at the different price patterns. I'm going to take a few minutes here and just answer some Q&A for you guys. And then, yeah, hopefully you can keep an eye on these going forward, as you're looking at those earnings beats, etc. So let's see, what other questions did we have? Let me know if there's any that I might have missed. Thank you, Ben, too, for helping out in the chat. Let's see, isn't RSI suggest? Oh, okay, Ben got that one too. Oh yeah, there is a lot of times you will get it. So RSI is interesting because a lot of times it can show strength of the move, and there could be a pullback that could occur after that. I mean, a move like this on earnings, yeah, it's really, really difficult to trade longer term, let's say like a CTSH. Like, for example, I'll pull this down. I mean, that's already a pretty big run, and then it ran up again. So one of the things that traders could look for, investors, is the possibility, because we did just break out too. I think we effectively broke out on a trade like this with that earnings announcement, but a lot of times they will come back down. And now you're saying to yourself, well, if the RSI comes down, and remember what a lot of traders will look for is the bare minimum it's got to hold up above is 40, they'll say. And they'll also like to say, well, at the 50 is where it's bullish. If it can hold 50 or higher, that's a real bullish indication. But I'm with you. I'm not like, I don't think a lot of traders are really inclined to jump in after you've had a really big move like this without some sort of a pullback, unless you're playing, really, really short term. Because that is really quite overbought. I mean, you're way above the 70 there. So it showed strength. The RSI shows strength, which it does. But at the same time, I realize we've shown a lot of strength, and it could be time for a pullback, which a lot of these do. So you get the earnings gap, as I kind of drew for you guys. You get the earnings gap or the break out, and then many, many times it'll come back and retest, or it doesn't have to go all the way. It could still do, a little bit of a sideways flag pattern and break out as well. Another one I'm just going to throw out here was Boeing. That's one that's kind of maybe gone sideways a little bit, but just barely starting to break out. And you'd have to say, in terms of like Boeing, at least in terms of the flag pattern right now, breaking, clearing some highs, sideways, and break. It's the first time we've really closed higher in that range. So that's kind of an interesting one. That's just one I kind of talked about in my swing trade class. Hang on a second, real quick, and we'll click on this. See what we got. Yeah, they didn't. This has nothing to do with an earnings beat. Sorry, I was just highlighting the technical side. So money flow is looking strong. According to what money flow is saying, we're doing. There's a lot of buying activity in here. Maybe there's possibly a turnaround. So here's the thing: there's your earnings beats, but I'm sorry, their earnings, but the earnings didn't beat. In fact, -3 to -5. But what did they say to go forward? What could unfold? According to money flow, there's a lot of buyers coming in here, right? Kind of following prices up. There was a good buying strength on this bounce up, according to money flow. But it's kind of like, hey, let's keep an eye on this. Let's see what does happen. And that gives us time too, for any stock. I'm not just looking at Boeing, but I'm just saying you can look in and find out what were the expectations. Are they really expected to turn this ship around? Okay. All right, everybody. Hey, if you like today's presentation, be sure and smash that like button. Also, bottom right-hand corner of the screen, hit that subscribe button too. So easy to do. But yeah, if there's something you found useful, smash that like button. It lets me and others know that it might be useful for you. Helps the YouTube algorithm to keep this kind of content coming up more frequently for you as well. But let's see. 90 says, what's a good strategy video to look at for trades to get, basically across the board? Take a look at our channel that I'd shown. I'm just going to share that channel right now, and we'll just finish up on that. But here is that channel. I shared with everybody in the chat just this. This is the swing trade. And I talk a lot about swing trade stuff in there, but there is our channel in general. And now it is in the chat for you. All right. Well, everybody, have a terrific rest of the evening. And thank you so much, Ben, for your help as always. Look forward to future discussions with you all. And folks, see you next time.